Hello, friends. Welcome back to the show. My name is Rocky Outcrop. I have my almost finished cup of tea here, and we're just about ready to do some wonderful Bitcoin technical analysis. Up behind me at the minute, I have the 24-hour Bitstamp chart as visible through the platform TradingView. This, of course, is Bitcoin to the US dollar, and the current prices are $11,068 per Bitcoin, with highs today having come in there at 11,118, with the lows today of being around about 10,850. And on the 4-hour time frame, you can see that what we have, if I zoom right on in here, is two candles which come up and put in two little wicks here, just kind of equal to each other, and perhaps there's some sort of takeaways to be had in and around this area, and we'll discuss that all in detail from the point of view of risk management in just a few moments or so. But what I wanted to do with the very end of my cup of tea here, I don't know if you can see that on screen. Yeah, there you go. Is to introduce the idea of what our concept that we'll be talking about in the voice chat on Monday in the Discord, which you're more than welcome to join. The Discord is free to join, and of course, there's a link in the description down below if you're not already a member of it. And you can join us, and it's a good time for everybody in the Northern Hemisphere to be able to join in. So you should be able to manage it no matter where you are. And what we'll be talking about will be this book, amongst other things. Of course, this is just something that I'm proposing to talk about. One of the things that I'll be discussing with people, some of my key takeaways from this book. And this book is called The Way of the Turtle. And there's a paragraph in it that jumped out to me just at the start that I thought I would use to kind of talk about this book, introduce the idea to people of reading it, and of course, and relate that back to my own channel here on YouTube with just here. So I'm going to drink the end of my cup of tea as you take a second to read that information. Now, you might have noticed, some of you might have noticed, that I don't really teach people to trade. Actually, let me rephrase that. Every single last viewer, every single last Rocky Outcrop competition out there will know that I don't proactively go around teaching people how to trade in every single episode. And that's partly due to the fact that, which is outlined fairly clearly in this paragraph here, that it is indeed relatively easy to learn what to do when trading. It's very difficult to apply those lessons in actual trading. And that is really what my TA here on the channel is all about, is actually telling you how to apply those lessons in actual trading. And the core part of that, of course, boils down to being able to rely on oneself as an independent, resilient, consistently profitable trader. And the self-reliance that I teach here in the show is a core part of what we do here. Anyway, we'll be talking about this and the concepts from this book, which I think is setting up to be a very interesting book to read, in the episode on Monday, and I invite you all to join with me for that. So what do we talk about? Well, we talk about the price action with regards to risk management. And of course, I always make the point as well that the charts are not inherently or intrinsically predictive. They are, in fact, better suited for risk management than they are for predicting the future. And it just so happens to be a coincidence, and that's what I'll call it more than anything, that when you look back at it's not a coincidence. You choose the words. When you look back at the price action since we started this channel here in January, and when there was this inverted head and shoulders on the go, coming up to the peaks that we had on Valentine's Day, February 2020, down to the lows in there Friday the 13th of March 2020, then falling on up to these highs that we had in August 2020, and then the subsequent turnaround from then, that having predicted, in inverted commas, the major turnaround points in the market and everything else along the way in between, really makes it look like I've got some sort of crystal ball. But in fact, actually, what we talk about is things in terms of risk management. And we've done a really, really, really great job. Anyway, suffice it to say that you've tuned into the right channel for all of that. And I'll just put the drawings back onto the chart in just a moment or two, once I've kind of outlined here without anything else kind of distracting your view away from what we're really looking at right now. There's a couple of things I want to talk about before we get into the nitty-gritty here with regards to the price action and everything else, just purely looking at this in terms of a market structure point of view. We have a diminishing volume here on the way. Obviously, these things happen in little chunks. These are like weekday chunks that you could actually look at, which is why I kind of take the weekends off. As you can see with the diminished volume, it's quite repeated pattern here over the weekends. And also we see this diminishing, and we see in terms of the structure that we came up here and we put in this distribution type top in around this area. We've come down to this low in $10,000 more or less, and then we put in this subsequent high over here. And what we're looking at right now is what we've been talking about for quite a while in terms of the structure and in terms of what will determine, how things go for us during October, really coming in at around about this key price area just for us just now. As you can see, if we were to just kind of go above this area, that as I hover the mouse over it, you can see with the serrated line here going from left to right, behind the crosshair, that this is obviously a key area for support and resistance. As you can see throughout this entire top period here, our previous high just there, and as well, if I go back the way, while it isn't necessarily, the most significant area in terms of the whole of the price of Bitcoin in 11,100, you can see that quite clearly in it around this area is where we had inflection after we put in our highs in the all-time high section as well. So it's obviously a very important point for us, and here we are just now kind of staring at it. Let's put the drawings back on to the charts and see if there's any insight for us. And I just want to as well remind people that we really did nail the technical analysis this week extremely, extremely well. And when I say the word we, it refers to the Rocky Outcrop community. It's not just myself here as a figurehead. Of course, my name is Rocky Outcrop, but it is us, the community, which did it. And in this week's episodes, more than any, that is the case, having actually drawn on some of the technical analysis which was done by a member of the community in order to kind of show us where we could be going over the last wee while. And of course, indeed, we have actually come up there and reached those targets. But I did that after having drawn in these other lines. Of course, there's a degree of overlap in what we're looking at. Now, I appreciate that there's a bit of mess on the chart here. You don't need to tell me in the comments down below. Don't worry about it. I know all about it. What I really wanted to show people here was the results of this symmetrical triangle and how the price action has moved in and around the three key areas that we've had drawn on the chart for the last wee while. Now, of course, I drew these areas in a while ago, a number of days ago, for sure. And I was calling them traffic lights. And I've referred to this messy chart throughout the week here in order to make this point again and again and again. The red line here coming in at 10,750, the orange line coming in there at 10,920, and of course the top end of this coming in at 11,120 as well. And there's numerous different things that kind of align with these key areas. For instance, of course, this 50% Fibonacci retracement zone here on the right hand side, as you can see, in and around about these zones as well of the 236 coming in there on the way up towards our orange line. And you might also notice this green line here, which was showing us the fake out territory from a move outside of the range of this symmetrical triangle. If I jump down to the 4-hour time frame, then you can see just how well the prices actually interacted with these levels so clearly here, coming up and touching this area at the 10,920, if you want to call it that. The reason why I'm so sort of vague or dismissive when it comes to actual precise penny points on the market is because that's a fool's game. So I just sum it up by saying in around about 10,920. It's up to you if you want to sort of split hairs about these things. And that's where we had drawn in our fake out territory from that symmetrical triangle. We came up and we bounced around this area quite a few times. Now, what we were also finding at the time as well is that we were finding support in at this 236 in there at 10,867, not managing to break down below it and consolidating here at support. Now, people often talk about how support and resistance, they get stronger the more times it's been touched, or it gets weaker the more times it gets touched. And of course, that's an entirely overly reductionist way of looking at things. It actually results in it being besides the point to look at things that way. And instead, what we really found ourselves doing was consolidating at support, just our resistance, either or, consolidating just above support, consolidating just at resistance, whatever way you want to look at it. Where our orange line is, of course, it doesn't seem to be visible on this 4-hour time frame, but that's on the 24-hour time frame, bang, right where that orange line is, of course. And which is handy, in terms of like looking at this in terms of traffic lights, and then moving towards the top side. And what we found is we've come in here and been resisted by this area throughout this, this profit taking line, if you like, where we find the price action having come in at. And this is a demonstration which, while it doesn't necessarily specifically tell you in terms of the amounts to put on and the exact place to put your stop loss or anything else, because I'm not a signals guy, what this is a clear demonstration on how to trade, right? And if you're at such a level where me talking about this almost seems, kind of inane to you, then well done. You've been paying attention, and very, very, very good for you. And if you're at a level where you're thinking, what the hell is he on about? Then I recommend you subscribe and you keep coming back for these daily lessons in how to trade, which are not done in the sort of, which just to refer back to that book again, that it could just, you could teach you how to trade in a week or less. But really what the difficulty comes down to is applying those lessons in actual trading. And of course, these sorts of discussions that we have on a daily basis are analogous to actually doing that. And I think that this is probably the most useful methodology in terms of what you can actually achieve on YouTube in terms of helping people to become self-reliant and independent traders. Now, where do we find the prices having gone up to this area? Let's just check in with our oscillators on the way, and we can see that we've got a high in here. This is, of course, the 4-hour time frame. Got a high in here, which is higher than this high over here and higher than this high over here, and all three of those seem to be more or less bullishly convergent with the price action down below. When the previously to this, when we had don't need to go back too far in time to discuss this in great detail, really. But we found ourselves come up to the 50% retrace area, a common retrace area. And of course, the ultimate target you could have in mind would be in about that 618 zone here over there at 11,450 to 11,550 area, as they noted with this sort of fuzzy grey line over here, a horizontal line for us. And another way of kind of achieving that in terms of how could we get up there and answering that question of what, from a technical point of view would maybe lead to that occurrence happening, you can quite clearly see that that's demonstrated perfectly in terms of the 618 golden pocket zone with a measured move off the back of this symmetrical triangle. Now, there's many different ways that you could do this analysis and come to similar conclusions, of course, yourself. And then what it really boils down to is how to trade. And one of the things that I would like to point out to people is that when you have these, if you're looking at a sort of textbook definition of symmetrical triangles and everything else, and what to expect from them, it's kind of a good idea to bear in mind that there's a relationship between this as being the full measured move and where the sort of your risk areas really increase with regards to trading these things. And a way of looking at it, of course, is to take their measuring stick and go to around about 60%, which I can do quite easily by just using the Fibonacci tool to give me an idea of where 60% of that size, that range there would be. Remove that from there, and now I have 60% in terms of my measuring stick, and I pop this on here, and you can see that it would be quite a risk in terms of holding on to positions past the period where we've gone past our previous high over here, past the green line, without then expecting perhaps a retrace from that point, and maybe be wise to take profit and see how things pan out at that point. But of course, I'm not a financial advisor, and none of this is financial advice, but there you go in terms of how you could look at this in just one way. Another way of looking at this, of course, is what we spoke about during the week from the sort of the Elliott Wave perspective. Now, I'm not a massive fan of Elliott Waves myself, they're just another tool that you can use in your arsenal of tools which you use to sort of wage war on the markets. But you can, look at these things, and of course the relationship between these waves is far more precise than what you'll find really most people talking about on YouTube. Most people who talk about it on YouTube use it as a way of predicting the market without any real sense of risk management and how you would do it together. Now, in terms of this move just here, and what we've been looking at on the 4-hour time frame, if you were to use your Elliott Wave sort of principles here, where's the Elliott Wave tool? Where are you again here? Shift, pitchfork, webs. Am I missing it? Why am I not seeing it? No, or is it this one? Elliott Wave 1, 2, 3, 4, 5. Right. So if you were to draw in your X, let's just do it body to body for brevity's sake, then that would be your 1 and your 2 would be coming in here. Then your 3 point then comes in one of these other places thereafter, and you would have to look at it in terms of Fibonacci retracement points and everything else to get it. But this is what your end result would really look at as well. So we've kind of done what we needed to do. And at this point here, it's a case of needing to see how things pan out. Now, this has happened on a Friday. And of course, that means that we're up for the weekend here. And that gives you increased potential for volatility. But what we also have as well is this increased risk and volatility. But in terms of what I talk about with volatility, which comes in very many different shapes and sizes. I mean, just like, frankly, the market here is naturally quite volatile anyway, as you can see, as it's sort of, it's resting heart rate, if you like. But moving in here and look at now as well, by the way, you should, if you're going to do Elliott Wave and stuff, then do it precisely. I've already looked at this in the past and discussed it with people. I know what the numbers were, but you wouldn't just do it so blasé like that. Now, what most people on YouTube would do is just go ba 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 ba, and on TradingView, and really in institutions and professional environments as well, and people get things wrong, so you really want to use them precisely if you're going to use them at all. And as well, what you need to look for is your risk management areas, and look for confluence to try and find areas where, of course, you could be looking at taking profit or expect reversals or any of that. And of course, these tie in with what we're looking at here. Now, we could look beyond these zones, given the fact that we have, of course, no bearish divergence on the go, but we're waiting for the weekend to kind of pan itself out for us. Maybe we'll find other things coming into play. Perhaps, even a revisit to come back down here and back test, if you want to use that word wrongly. See people on YouTube saying the word back test like that. That's not what that word means. But anyway, one of the people who I respect most on YouTube, by the way, uses that phrase consistently, Mitch Ray. And it's not. But anyway, the if language was set in stone, then we wouldn't have needed the Rosetta Stone, would we? So anyway, coming back down here, that could be a potential retest zone for us. Of course, movements past this zone are taking us past this area over here on the 19th of September. And what we can see above us is, of course, clear skies up to around about where we have this area here on the fuzzy grey line. So that, you've got clear targets here in terms of what you could be looking at over the weekend. Bringing up the DMI just to give us a bit of a more finger on the pulse of things here in the 4-hour time frame, we can see that I'm speeding up. Shout out to Peter here. Oops a daisy. Oh, I forgot to do that. I'm going to have to do that more. Oops a daisy. I didn't mean to speed up there. I was just trying to get through the episode. We're 17 minutes in. I'm going to wrap this one up. You'll have to watch the rest of the episodes today as well for more of that oopsie daisies. But anyway, looking here at the chart, you can see that we have, of course, got this turned into an orange area on the ADX line, which gives us the opportunity for us to be judicious over the weekend and think that, there is a strength of trend towards the top side. However, we're not quite above 25 yet. I'd like to see this get to those regions. And of course it could, and it's on the way to doing that. But we could also see a reversal test, in this area, and it come back down again to perhaps retest this sort of 20 zone. And that'd be something to look out for if it were to, for instance, kind of do over the weekend a little sort of oopsie daisy here on this one. Then we'd also be looking down and asking questions about how this will pan out, and if we oopsie daisy. If we have a potential sort of medium-term reversal on our hands, the question really at the minute is kind of along the lines of where this trend is taking us to, and if we're going to resume the overall trend, which of course looking up against or something like the 2-day time frame and taking all the drawings off and squishing it down the way you can see is being characterized here by lows, highs, higher highs, higher lows, highs, higher lows, highs, higher lows. And are we going to go on to make higher highs again? Or are we actually going to come around and come in and fill in things like the CME gap that we have over here? So there's a couple other things to talk about then in terms of quick sort of oopsie daisies, which might catch you out in terms of your technical analysis. Starting off here then on the 2-day time frame, back over on the charts we were looking at just a second ago, and drawing attention to the fact that in terms of the overall sense of things, we're still in a kind of a chop phase with regards to the market. And we have got the weekend looking at us in the face here, with ADX coming right down below 20, where the potential for us to come down into sort of volatility territory yet again. Looking at the 2-day time frame, you can see that the last time we had a shaded background area, sped up again, didn't mean to, oopsie daisy, was what led to this rise up. If we, of course, we see the ADX go down below those areas again, I'd be looking out for this volatility. I might edit the code here to make this number, which enables the grey shaded area to be an input which you could change on the charts. I think that's probably a good idea. Probably do that over the weekend as well as reading that book I was talking about. But anyway, that's something to be bearing in mind. And if I just drop down the time frames, you can see that while we have this cross here positively, that we're still in oopsie-daisy territory with regards to this ADX and whether or not, of course, we're really showing us a strength of trend towards the top side. What we really have is if you want to explore this thing for sort of academic value, is that we had this cross over here, which is obviously negative. We saw this coming in here at this time before the prices dropped down the way, and then you can see how the strength of trend, while it increased over the while, we saw the diminishing and the convergence between the positive and the negative, really, with this drop down in the minus DI, and then we also saw the prices go towards the top side. And when did that really kind of kick in was when we also saw the ADX change from blue to orange at the same time as this crossover here. So in terms of how does this look with the regards to the upside? It doesn't look like anything particularly momentous in terms of things, as we saw many times in the past that we've had a lack of real strength of trend here as we kind of twirled around a wee bit, looking for instead a really conclusive cross as we saw evolving out during this period here at the end of July. Now, it wasn't on the 24-hour time frame a case of just simply looking at this alone and making that assertion, but of course we had various factors. In fact, if you go back and watch the video from that time, you'll learn precisely how to trade. Is one of those examples. If you look at the video from the 20th of July, you'll see a video which teaches you how to trade precisely in exactly the way which I say that I don't really do all the time. So there's a really good example of that. Anyway, as I look down at the time and I see we're at 21 minutes, oops-a-daisy, I've left this go a little bit longer than I wanted to. You can see that there was, of course, the question mark happening here, but then we did have this conclusive crosses that went to red to orange to blue as the prices then went up the way towards the top side, kind of giving you a tentative way of trading this. Now, of course, we have a cross over here, but what we're really seeing is not the same sort of signature, if you like, in amongst this this area just now. So we're kind of tentatively waiting for that to happen. Going down the time frames, you can see that in terms of the 12-hour time frame now, we actually get to look at this volatility in terms of where we are just now. And of course, on the 12-hour time frame, didn't that spell for us perfectly the run up to where we were going to break outside of the symmetrical triangle? Just as a quick reminder to people, pop the drawings back on again. You can see we have the symmetrical triangle. We're coming up towards the apex of it. Then this zone here kicked in as we had a fake out from the apex of on the top side of the symmetrical triangle. Looked like we could maybe do it, but actually I was kind of negative about it at that time, as discussed in the videos. It's quite obvious. If you look back, you'll see the sentiment was quite clear there. Then we came down towards this zone here during this period, which built up in terms of potential for volatility moving towards the top side thereafter. And it's this sort of activity that you need to do to be able to link together the time frames and build up a narrative, and really kind of see what's going on with clear eyes. In terms of the 12-hour time frame, I'd like to also point out the fact that we've come up to this oversold territory in terms of the stochastics, and looking back the way, you can see that we're very much in an area where it has often turned around at. Now, whether this actually affects things in terms of the macro would be too rich to say so, especially on this 12-hour time frame and whatnot, but you can see that there is sometimes a pullback in the prices with regards to all that as well. So yeah, the video's gone on a bit too long. Oopsie-daisy. That's what you get. But we have got some clear areas to look to in terms of price action, and a nice discussion about what it is to be a trader, and a tip for you in terms of if you want to get a lesson, then you could look back at on the 20th of July for our lesson, go 19 minutes and 30 seconds into that video, and the lesson really truly begins in terms of just putting money in your pockets. But what we're really looking at the minute is asking questions about how we'll perform in and around this zone here. And as you can see, is a clear profit taking line. Holding on to positions past this zone for to get to, say, 11,150, where the 50% Fibonacci retracement point is just here as an example. It constitutes a far greater risk, of course, than having taken profits at these zones. Obviously, that the risk that you're getting to gain for an additional $40 or something in terms of prices, or $30, is so much greater than the risk that you were accepting between 10,930 up to 11,121 that we joke about in terms of the numbers of this thing. So that's what you got to look to. And this is the other thing I was going to talk about, that if we were to see continuation, there we go. Like I didn't actually say goodbye, so I don't have to sort of oops-a-daisy that one. I didn't actually say goodbye before coming over to this area to give this last little bit of chit-chat, but here we are. This is the CME charts again. Now, what I had done in yesterday's episode was say that I was more comfortable looking at this as a symmetrical triangle, yada yada. Now we've had the breakout from that, and we've had the textbook measured move more or less accomplished. What we also have here is the potential for this to be perceived as not born, but perceived as, or not, whatever, as an ascending triangle still, which does give you the opportunity to do a measured move. This is not an exact measuring stick, whatever, here off the back of this one, and look to those higher targets such as 12,000. So if you were looking for a reason for it, that would be one, alongside, of course, this movement up in the RSI outside of its own ascending triangle that we have there on those charts, and of course this grey area here. Now we are in the potential for us to, zone-wise, for us to actually see a retrace. Now, if we saw a retrace back down below $100 down from where we are now today before close, then I would be more inclined in terms of managing risk to be looking down towards these 10,600 areas again before looking at this measuring stick, and then asking questions about the duration and size of this ascending triangle on the 12-hour chart. Looking up at the 24-hour, you can see that we don't have that volatility grey background area like we see over here on the 24-hour time frame before that huge rise up where we've got the gap. But over here in the 12-hour time frame, we do see a similar sort of idea. Could we get a big rise up, and indeed perhaps even another gap on the charts because of this over the weekend, or will this actually result in us going towards the downside? Now, actually resolving those questions and coming up with a conclusion based off the back of it, I'm going to leave with you. But to say that I haven't given you food for thought now, of course, would be fibbing. We don't have this on the 24-hour time, on the 4-hour time frame. We also see this orangey line, but I would like to see how this gets a resolution. And if we need to retest this area, of course, that's fine. But this is why we're talking about not backtest, but retest. But this is why we're talking about this line currently as being crucial in terms of the support and resistance zones that we're looking at. Other things of note, which we could look to include, if we do go up towards that filling in that area, then maybe we're just fulfilling this gap which remains on the charts. We also have a descending wedge here on the GBTC charts. It's so clear, as you can see. It's been a while since we've talked about this, but it's right there. And movements outside of this do indeed, of course, take you up towards filling in that gap there. As you can see, the gap exists in that zone there. So, you've got these things on the go. That has got to be, it has got to be some of the best technical analysis that you can really get in terms of YouTube and trading. And just one final point again, that if I even if I did tell you in every single episode how to trade, that's relatively easy to learn. And what is the difficult part is actually apply those lessons in actual trading. So hopefully I'm giving you the keys to the kingdom here and enough food for thought so that you are actually able to learn these things here. And a lesson learned yourself is so much better when it comes to waging war against the fish, as we like to joke about here, rather than for me to simply hand you a fish and tell you that your part in the war has been done for today. So that's that. I'll catch you on Monday. I'll discuss with people there who are willing to discuss it with me, that book, should I actually get time to read it, which I suspect I will. And I really do appreciate you tuning in. Of course, I'm happy enough with this being a longer episode, given that it's the weekend and I'll not be back until Monday to do more technical analysis with you. So that's that. I'm happy enough with this, and I will see you again soon. I suppose I could just go up to the cover of this book so you can see what it actually is and called and everything. It's called Way of the Turtle. See you next time.